Oof, you scare me, man. You scare me. Oh boy. All right, let's get the screen working here.
It's no longer cool to be the OG DGN.
It's all right. Everyone's got their own style, and you know, you got to do what works for you. Always, always, always. All right, couple minutes to the open. The news that I'm looking at is all the same stuff: tariffs, no tariffs, tariffs, no tariffs, Greenland, no Greenland, whatever, same thing.
You're still in your ES position, right?
Yes, no, here, I'll show you guys. I did a few different things here. So the position I got into earlier, a few hours ago, was the breakout from here. You can see on my chart. I took this breakout, went, and I got out at break even. And a few minutes ago, just before coming on here, I put on this position now with a stop. This is an experiment. I don't like to do this. I don't think I'll be doing this when I really go live, where I'm putting on a position just before the open, because the open, you know, gets volatile and just unnecessarily can get stopped out.
Yeah.
But that was a good position to get into. The breakout just went, and I did not take any partials, or didn't get to my partial areas, which were further up, and stopped out. But the fun would have been to re-enter, and I was not watching this over here at the time. If I'd put an alert on my phone or something, I might be able to get into these positions. So anyways, the setup is really neat. Again, obvious resistance, gets up there very neatly, breaks out on a 1 minute. You can get the ABCD pattern, and off you go. And this thing even did an ABCD pattern or a breakout retest on a 30-minute chart, what, 2 or 3 hours ago right here, and looks like it's on its way. Same thing with the Qs. Got into that long, went, and I got out at break even, and just a few minutes ago I put it on again. And let's see. Again, this is these positions here, putting it on a few minutes right before the open is not something I think I will be doing. It just seems scary. Why is the stop all the way there? That makes no sense. Look at that. That's way too wide. It's not the right place. Should be at least up here. Give it that room for the open volatility. And here we have the Russell. Same thing. Breakout, retest, and going. Again, all of these are done perfect breakouts and retests on a 30-minute chart. If I was just watching it 2 or 3 hours ago, I would have been able to get into these. But anyways, everything looking bullish overall with the news, at least, and things making a move. And what's most interesting, the reason I like this area is because there's room to the left. This is one of the key things of the way I like to trade. Room to the left as it got into this breakout, break of this previous resistance. As it goes up here, there's massive room to the left, right? Basically going and filling that previous gap. So I think there's opportunities in this area. Just make sure you pick your setups. And yeah, it should be all right. I expect a lot of volatility today, just based on the news. But you know how it is. Watch the price action. Don't go in with a bias. And then you'll be in a good spot.
Target build.
Yeah. Oh, no. You guys already hit targets? So you, Brian.
It's a cent trade on gold. I forgot to mute my mic. Sorry.
Nah, it's all right. All good. There's some interesting activity I've noticed on the oil futures. I'll share with you guys in a bit after the open. As well as on gold. Got these things going on. Silver, it's a bit of a mess. But anyways, there's lots of interesting activity here. Anyways, market's about to open now. You all know what to do. It's a gold mine. Take it easy with your setups. And you never know what's going to happen after you enter, right? It's always 50-50. Either you stop out or you don't, you don't know. So take it easy. Look at that thing. Hit my stop. It partially liquidated. Let's see if it goes and liquidates. There you go. There you go. Fully liquidated. There we go. It's funny how this little software works. If you look at it on a 1 minute chart, you can see this most recent pre-market low area, support area. So far, it's just bouncing off of that. But the real fun is finding the buyers where they were previously, if they truly are there, and you can see where they were, just higher lows. With that, leading up to the breakout to the upside, that's when it gets powerful. Yeah, which would just be a breakout of the pre-market high, basically, and then you're in this thing with momentum. So let's see if that's an opportunity. Oh, there it goes. It's getting close. So the way I trade, if I was going to get involved at the open with this stuff, I'd put a very wide stop usually a very small size. Again, this is not stuff I do anymore. But let's see. Basically, printing a new high would be an entry. Is that a new high? Just about is. Looking to find a little momentum going through that high. Not really there yet. And because I usually trade the 30-minute charts, I put a wide stop on this and let it run. Give it the time it needs to really go the distance. Unless you're scalping, then that's a different world. And again, because I'm in the sim, I can play with this a little bit. This is not. No, this is how I used to trade. Not what I do anymore these days. Let's see. I'm just watching to see if it can get back up to its own high and get a little momentum going through it. Just watching momentum here at the open. I'll zoom in for you guys. There you go. Now it looks like a big candle, right? Well, really? It's just nothing. It's tiny. But this is entertaining, so we can do it. There you go. There's your momentum. Bye. Okay, so got into a position here. The stop is down here. So, gosh. Anyways, with scalping trades, if I'd entered the breakout here, my stop would be in the middle of this consolidation, most likely. VWAP's probably in that area too. And then you're basically hitting the partial button as it goes in your favor. But that's not what this is. You can see that's the entry. It's a 30-minute chart. Just took the entry, see the stop, I'll tighten it up, and then we go into this resistance area. And that's basically it. That's how I would do this. Again, the tricky thing about the open, because the 1-minute candles are quite large and quite jumpy, I've been avoiding this stuff. What about the Qs? Q's not working. And going the other way. And the Russell, oh, look at that. I got into this position earlier. This one's gone. And this is where you can tighten up the stop. This is interesting. Look at this. So where you can see the consolidation, the breakout, and it's really gone some distance from the breakout. Might as well bring the stop into even below the consolidation, or you can bring it in below the breakout candle, which I'll identify as the first big one. So it's right below the wick there. And let it, yeah, looks like it wants to consolidate. And when it breaks a new high after that, then I'll be able to bring it inside to the break-even area. Anyways, that's how I like to trail these things. De-risk, minimize the risk, then go further up. Targets on this, where are the targets? Yeah, it's nothing overhead, huh? Anyways, let's de-risk and then we'll figure out the measured movement and go from there. So anyways, lots of opportunity, guys, I think, to the upside on the SPY. Just the way the candles are setting up the previous action in the last just 24 hours even. Where it's just been higher lows, really. And the news also bullish, something to push it along. And yeah, I think the real opportunities would have been 2 hours ago if I was able to enter, if I was watching it. I got to put alerts out there so I get notified when the price gets there. Anyways, fun stuff. Yeah. We'll get into this oil situation. I think there's something brewing over here. Let's talk about that in a minute. Anyways, what else is on the move, guys? You have anything to discuss? I think I saw a few names being talked about earlier. Waymo, Robotaxi, Spirit Airlines, OpenAI. Things on the move, things in the news.
I'm looking at USAR. It's a what do you call it? Rare earth mining. This thing really popped up.
Okay.
So far, we'll see.
All right. I can't pull it up here, but if you want to share, please do share and show us what you're looking at. USAR. I'm sure this. I'd be careful with mining stocks. I've been invested in mining stocks for a while. That's a different world, of course. Scalping and all that. I would think they behave like low floats. Oh yeah, look at that.
Yeah.
You see your screen here. That's amazing.
That would have been, a possible entry if I wanted to get the high of the break around 2028. with a stop right at about 20. But we'll see what happens if it gives me an ABCD down the road. I was kind of
Sure.
also watching ASTS as well. That had a news catalyst, but not much else really.
Mm-hmm. Well, good pick on this. So how do you pick this up? You have a scanner or something for this mining stuff?
No. I mean, I do have a scanner. I just I kind of have an A list and a B list, and I've kept a couple of these rare earth minerals on my C list actually. This one and also a couple of these. Once in a while, I'll just kind of check it out, and I saw that it had a little bit of extra pre-market volume, and so I thought, oh, maybe I'll just kind of check it out and see. But
Cool.
but that's about it. I'm not really looking at anything else this morning. Nothing really catches my eye.
Fair enough. It's funny, those rare earths and uranium, these are all part of my portfolio, long-term stuff. I've been investing in these since 2016, 17. And anyways, that's a bigger play, but yeah, sometimes they do come into the news and have unusual volume, and it could be decent for day trading, but my observation of these ones is treat them like they're low floats, as in they get very spready and jumpy. You definitely don't want to short them. From the day trading perspective, you're going to put on a big size, maybe with options even, go long. And but if you get the move right, then it's a matter of 20R on the risk per trade, something like that, when you get it right. That's the beauty of it. So yeah, good stuff. Keep an eye on those. I mean, it's not a strategy that I use for day trading anymore. I think I talked about this earlier this week. I used to use the low float strategy. That was okay for a while. But I find that the heart rate is a little too unstable when you trade these things. So, but yeah, it's good to have at least what's good is you seem like you've got a good watch list, like 3 tiers of things you like to watch. That's good, because then you don't go hunting around for tickers and you're not anxious for an hour before the open. You just kind of know where your lists are, and if one of them or two of them has unusual volume or catalyst, you put them on the screen. That's a good way to go. I like that method, guys. It's really good, where you do whatever you can do to not stress out before the open. Almost everyone does. Then you're thinking, did I pick the right ticker? Am I going to miss out on something else? All that regular stuff. What's the point? I mean, I like the futures thing where I've just got these few futures contracts on here, and that's all I'm looking at. Makes life easy. So otherwise, if you're stressing out before the open, it's like you've already lost 20 trades before the market even opened. Emotionally, you're already a wreck. You don't want to be doing that. So be careful. All right, so this one has moved. I will de-risk it now. You can see the go up, come down, higher low, printed a new high. Now bring the stop to break even or a little better. I mean, I can even bring it in to below the recent low here. There's no need for that. This is fine. If there's no risk on this, and let it run. We'll find some targets overhead. 30-minute chart. What should we look at? Measured moves makes sense. And this is the Russell. I'm surprised there's no level overhead. Anyway, measured moves are round numbers, or if you guys like the level 2, you can look at the level 2 and see where liquidity is sitting. So let's go with measured moves. I think that's something I like to use. Okay, here's a low. Or you know what? There's another way. Let's do it this. Let me think. Actually, yeah, I'd rather just keep it do it simple. Okay, so here's a low. We got, let's call it 27.10. And this high is 27.30. So 20-point move from 27.30, 20 points puts you at 27.50. That's the target. Okay. So let's put 100 contract position. I'll put 80 of those. Let's put this whole thing in OCO mode. So that'll be the stop. Put 80 contracts to stop out just at about break even. And the rest of them just around 27.50. Then I've got 20 contracts still on here. So again, the same 20, stop at just above break even. And what looks good? We said this would be 20 points. No, let's just go with this then, 20 points. This will be 10 more points. All right, that makes sense. Half of the measured move going forward. So if it gets to this first target, as far as I'm concerned, the trade's over. Everything else from there is a bonus. Anyways, for now, it's all risk-free. There you go. Put that in the right place. There it is. And leave it alone. That's it. Your work for the day is done. Simple. I like doing things like this. It's just easier. Hands off. So what happened with the SPY position with ES? Yeah, just sitting there. 1 minute chart. So it took that entry as it broke that pre-market high. Came and bounced off where it bounced off earlier. Didn't get me. Let's see if it holds above pre-market high. At the moment it is. And we continue upward. Then I'll do the same thing. Be able to bring the stop in tighter. De-risk it. And then put the targets in place. This looks like a nice number. 7,000. Right about there. Yeah, just about. Makes sense, right? So let's see what happens. Anyways, this is the one that's working now, is it? Where is it? MNQ. Oh, I lost it. This one. Cool. Simple enough. I'll find a way to get into this thing with some real size. And what's tricky with these futures contracts compared to the options that I used to trade is getting those massive RVR trades. With the options, actually, I found that it was easier to get. Once I got into a position that began to work, the RVR just expanded just because of their options. That's how they move. With futures, I've got to recalibrate how I think about RVR a little bit. It's not as common to get those 10R trades that I used to. So that's something that I've discovered here so far. Something to think about. But the leverage is still there. It's tremendous. Liquidity is not a problem. So it has a lot of good things. All fun. All right. Oh, yeah. I shared this with you guys earlier a few hours ago. Oh, look at that. It's at the left. You all know what this is? Well, I'll tell you. This is the gold futures 30-minute chart. You know what these levels are? Anyone want to take a guess? No, yes, no. Oh, you're all over trading. All right, I'm not going to tell you. Not until someone tries. Evo, there you are. Fibonacci levels. Close, close. No, they're not Fibonacci levels because Fibonacci levels were measured off of the 8 a.m. candles, right? I don't even know where 8 a.m. is on this chart. What this is just a pure measured move, nothing else. So I started with the bottom of this candle, went straight up, and that's the top right there. Just measure that distance. And from there, the same distance up. That's all I've done. Now, if you use these levels, just measured moves, you can see if you got the breakout, goes up to the next level, consolidation, again, breakout, retest, up to the next level. Struggled tremendously. You may have gotten into the breakout here, would have gone halfway, you'd be out at break even, or even take partials at halfway. If you guys remember, when I used the Fibonacci measured moves, when the levels were really wide, I would put partials at halfway and then see if I get more. And anyways, so just measured moves, just based on this. And so this thing respected these levels quite easily. And then as it made these lower highs and dropped, sure enough, it dropped just about from that level very fast down to the one below. Then again, there's the bounce, and now it's hit back up there. You can just leave this on. This was, what, 3-4 days ago that it made this move. And since then, if you just leave these levels on, you don't really have to do too much else. Just leave it, wait for it to get there, and you can pick a trade. You guys know about this style of trading, right? Very simple. Did it plenty. So, again, the nice thing about bigger time frames, once you find a level on something big, it usually doesn't have to move very much. It can stay there. Sometimes the same levels will be in play for a month, the price just stays in that area. So, simple way to go, not too complicated. Right now, what we see on the 30-minute chart is it made this move from down to up between these two levels. And now it's sitting at that level. Let's see what it looks like on a 1 minute. There it is. The level's just about there. Strong at the open. And you can see this ascending wedge with basically a flat top, just about at the level. And these higher lows. So there you go, ascending wedge. Looks like it may be setting up for the breakout. So you may enter the breakout or wait for the retest, enter that after the breakout if all that happens. And that would mean on this 30-minute chart, your entry's in this area with a tight stop, and halfway you de-risk, you know there's sellers there anyway. And then you're further up. So there you go. Fun. Again, measured moves, nothing complicated, nothing new, nothing unheard of. You can read about them in every other book. They're just underused in the trading world, I think. All the other fancy indicators are used a lot more, but I find this very effective. The whole Fibonacci thing was based on measured moves, right? Remember that, guys? Very, very simple. So this is something to look at. Oh, yes, and I was going to tell you about oil, right? Yeah, that was what was going on here. I'm trying to remember. Oh, yeah, so we were talking about this a couple of days ago, and in our candlelight session as well, a couple of days ago on Wednesday, Thursday, Wednesday. What you're looking at here, let's go back a bit. You're seeing this consolidation, right? And then you're seeing where it broke out of the consolidation and it really went upwards. So it did a false breakout to the downside, then went up. So what you're trying to identify here is where did the serious buyers come in and what candle was absolutely truly bullish that then made this breakout happen. So from a consolidation. So from this consolidation, I see this white candle. I'll zoom in for you guys. From this consolidation, I see this white candle where it's absolutely bullish, right? Almost no selling wick at the top. Got a good wick at the bottom. So then from this, I'd identify, okay, here's where the buyers came. At the bottom of this candle, we know there's buyers. So as the price goes, if it comes back into this area right down here, I'd like an alert to go off and tell me the price is back here, and I will see if those buyers are still there. So let it go. And here's a level right here. I'll put the cursor on it. And let's see. Now it came back to this area a few hours ago, right about there. And sure enough, you can see that there's been buyers there. It's been choppy a bit. You may have taken one stop. Again, this is a 30-minute chart. So you're waiting to see on a 1-minute chart what this would look like. You're looking for a reversal because it's come down. So now you're looking for a double bottom or some sort of reversal setup from this precise point on the chart. And you can see it's been putting in wicks just about here. Even right now, it's putting it in. It's messing around with that area. Was it 59.55? Let's go to the 1 minute. 59.55. Yeah, so it dropped at the open right through 59.50. 59.55 is here. So you're looking to see if buyers are here. Sure enough, it put in that big hammer. And it's giving you some interesting activity. For now, it's just chop, but it's not purely bearish. You can see the buyers are stepping in a bit. So you're waiting for this 1 minute setup. If the 1 minute setup is not there, then don't take it. For now, I don't think it's there. But it's an area to look at, 59.55. So this is an interesting way to do it. We caught a couple of really neat moves in the last 2 days on the ES, going short, doing this method. So very simple. Really, it's over here. You're first trying to identify a consolidation. So you got that here. And then identify the breakout. You got the breakout there. Then you're going to identify what truly, where did this breakout truly start? And I'm just using a 30-minute, pick it on whatever time frame you like. And I'd see this single candle. This is a pure bullish candle. Over here, yeah, there were buyers, but this candle even had sellers on top. This one was purely bullish, and it never looked back from those buyers who started the buying from down here. So that's your level, 59.55. A simple way to find levels. Not very complex, can be a little subjective, but you get the hang of it once you do it enough. And sure enough, it's in that area. Let's see if it gives us anything. It's not really on the move right now. Anyway, this is the oil market. But that's one way to go. Something I've been looking at lately. So it's a good thing where you can actually put an alert at that level, and it'll give you notification at some point during the day, whenever the price gets there. And then you can look at it there and see if it's got a setup for you. If those buyers are still there like they were before, you're only thinking bullish. You're not thinking the other way. So it also gives you your direction. so you don't end up over trading, chopping yourself up at the level. That's very important too, of course. And the nice thing about the futures market, like we know, it's open 23 hours, so it could notify you at any point during the day. As long as you're awake, you can look at it. So you're not restricted in your trading again. So, fun stuff with the oil market. I've been looking at this. Yeah. Let's see. See if it goes. All right, what do we got here? Brian, you're short the ES. Hit the profit point. No reaction to the Asia market. All right, let's look at the ES. What happened with it? Oh yeah, drop. Yes, I had that same position on and it dropped. So again, that's why I don't like putting on these positions at the open or right before the open. Not my way of doing things. There you go, guys. So that was a very aggressive drop. Wow. And at the moment, it's stalled. Let's see. Again, I still believe just on this picture, the bigger picture, looks like there's a bigger move to the upside. So wait for it. Maybe even catch a reversal. Look at this, where it's bouncing off right now. You can see here, this was previous resistance. I'll zoom in again. See here, previous resistance. And right now, it seems to be bouncing right off that. So what you have is breakout and a retest. So it's just doing a retest of what was previous 30-minute resistance, overnight resistance. So there is an opportunity down here for that long, if you're able to spot these 30-minute pictures, bigger time frame pictures. And when you take these, I mean, this is where you really need to run it up further. I haven't been looking at this. What are you saying, Brian? It's a weekly level too? All right, good. There you go, weekly level, right about there.
Yeah, though, I got a weekly level on ES. Where are we at here? Let's see, I think it's 69.42 1/4.
Okay, 69. Okay, right about, yeah, just about where it is now.
Yeah, so what I want on the 5-minute to stay in this trade is, so we obviously lost it with the last 5-minute candle. I want this 5-minute candle to retest, which it's done, and then lose it. It can close green just as long as it closed below. And then I'd be looking for a new low. My final target is 69.15.
Okay, so you're going lower with it. Gotcha. Down here, 15.
And that's
the Asia, right? Asia session.
Yeah, that's the trade. That's the overnight Asia low. So that's, you know, if that happens, then this should happen kind of thing.
Gotcha. Cool. Okay, there you go. That's a good little method. You're looking at the different sessions and then effectively getting in with opening momentum, going into that just recent price activity. Cool. See, guys,
if the 5-minute closes above that weekly level, I'll get out at a new 5-minute high.
Good. All right. Risk management. And that's what I like, you know, guys. I think that's a good example. Just having your method well defined. You're removing the subjectivity as much as you can. You know, the 5-minute candle has to close above, I'll do this. If it closes below, I'll do this. I mean, it's very clear. If you have that in your trading, I think things will become easier, a lot easier. So try and think about that. Create a method that you can do robotically as much as possible. And then you even, you know, become less emotional about it. And that works. We got here target gold might break out. ABCD on the 5. Let's look at gold. Yep. It's right at that measured move level that I like. You're looking at a 5-minute ABCD. Okay. I've got a 1-minute chart. You'll be able to see it. Again, still a flat top and higher lows. Very ominous, huh? Imminent breakout. But again, you know, these fail all the time as well. So if you're anticipating the breakout, let it break out, let it retest. And then you have all the conviction in the world to put on the risk. Ideally, you'll be waiting for it. But again, gold is also in the news, so you know breakouts are more likely to happen. Well, precious metals and energy with all the geopolitics. Cool. Silver will happen. There you go, on the move a little bit. I think I see it on silver where see this consolidation. Silver consolidation right there. And then we have a looks like a breakdown. Where do you identify a really bearish candle that led to the breakdown? I don't see any. Look at these 3 candles. They're red, they're gray candles, but they all have buyers in them. At the bottom, you can see the wicks. So I don't identify any of them as fully bearish. Not this one either, even though it moved, but it's got the buyers at the bottom. And this one, well, the breakout's already done at this point, so you can't identify anything here, the breakout from the consolidation that you can go with, like we were talking about earlier on oil. So there would be no short alert down here. And so far, since the market's open, it's been bullish. But really, this is silver, and it's looking like a mess to me. There's no room to the left. It's just in a chop zone, 30-minute chart. If you zoom it out, like I usually like to do, yeah, I mean, this is just a mess. Stay out of it for now. Let us know, Tark, if you see the gold thing move. Where is it? This is oil. This is gold. There we go. Okay. Let us know. It's still in that ascending wedge pattern. Very interesting. Q's, what happened? Yeah, Q's dropped as well. We saw that earlier. And let's see, is it going to bounce off of the, well, it didn't bounce off of what was previous resistance. It's gone right into it, right? Just looking at the 30-minute chart. So, tricky place to play with it. I'd leave it alone. Here, the Russell. What happened with this? It's been choppy. Oh, yeah. That's what I was saying. I don't like to get into these trades at the open. See, the trades I'm looking for are basically trends. They pick a direction, they go in a direction, they do regular pullbacks in that direction. That's fine. But at the open, you rarely get that. What you get is, this thing's making higher highs, then I'm going to lower low. What the hell is this, man? You just got to scalp it up and down. You can't really get into one of those genuine 10R kind of potential positions where you just put it on for the trend and de-risk it in a very simple way and then let it run. That's the hard part. When you're trading the open, that's the hard part. And that's exactly the trading I'm moving away from more and more. But yeah, nothing wrong with catching the breakout. You can see here, I think I did try this one, yeah, breakout. Broke the pre-market high, you go, you partial, add some partial, stuff like that. And those trends that I like to see, they don't typically start near the open, the New York open. Yes, it's going down. It was looking like it was bouncing off of that previous, here you go, this is the ES 30-minute chart, or MES. That was previous resistance breakout. Looked like it was bouncing off for a little while, but here on the 1-minute chart, would you take a reversal long? What do you think, guys? We know this is an area. Anyone got a clue? What would you do? Is this a reversal? I'm sure as soon as I said reversal, a lot of you guys just jumped in. Don't do that. That's the worst thing you could do.
Getting stopped out already.
You guys are all professionals at stopping out, huh? Actually, that's a good thing.
Got a news dump coming in about 10 seconds. It's
Okay.
basically PCE, info, consumer spending, personal income, that kind of stuff.
Alrighty, cool. Thank you, thank you. So we'll watch that. This thing will jump around probably. Anyways, as far as the reversal is concerned, this thing made a lower low. It's not a double bottom that I like. It's not going to go up. Now the pattern's broken with the news, but a higher low would complete a double bottom, then you have a reversal. Here, no, not this one. But yeah, you can see with the news coming in, the candle's jumping around, breaking the patterns or price action. Let's see what it does. News at 10.
My stop's adjusted to just over 5 points profit, and I'm basically holding just above PDC for my final target.
Nice. Totally de-risked, yeah? no risk on, and let it go. Good work catching that. Very neat. You seem to have a good system of reading the different sessions and then identifying momentum near the open. So there you go. One way to do it.
Yeah, me and T were talking. If you look at the last 2 days, like if this trade hits or whatever, at this point, I'm like, I'm done with it. I'm not looking for a reversal. I'm not looking for anything. I'll come back around. I'll kind of watch on my phone, but at like 11:15ish, I'll start to really look at what price action's doing because that's wrapping up the London session, setting up for the New York. The last 2 days, it's the same trade, nearly the same price, and we got those huge drops around that time. I caught the one 2 days ago, and yesterday I was busy and just had to cry a little bit and watch it happen.
Fair enough. Yeah, good. And I like that method where also, again, your alert is the time. You know, when the session is wrapping up, 11:15, that's when you show up and take a look if it's doing what you want it to do. And so that's a good thing. Much better than sitting here and watching the market all day long. That'll drive people crazy. So good. Either you haven't, you should have an alert one way or another. Either it's a certain time, like Brian's looking at, or a level. Levels are something I tend to do more of. Otherwise, just showing up and looking at the market all the time, that's you're gonna end up in a lot of trouble. Emotionally, you'll just drain your mental capital, put it this way, and then you'll just take trades unnecessarily. We've all done that, right? So you don't need to be engaged with the market all the time. Just have an alert. You know when to show up. That's about it. Good stuff. Yeah, this was what we were talking about. Well, let's look at this real-time action, and we'll come back to this. There you go. The news made the candle jump up and down a bit, and then just looks like it just printed a new low. So it looks like it's just continuing its move down. There we go. Good stuff. All the way down. So into this previous consolidation zone, we have buyers sitting below it. And this is an area I would have looked for the reversal. Oh, sorry. Actually, down here. Might look for it here. So anyways, for now, the real-time price action is bearish. So forget about, going long. That would happen lower. Fun. But here's what we were talking about during our candlelight session. And you guys should definitely come to those if you can make it, if the time works for you. Because again, in those conversations, we can get much more in depth with all kinds of things. So here, basically, we're looking at this consolidation, really choppy. And this was the breakout candle, right? Completely bearish. So the top of that candle, 69.05, is where I put an alert telling me that there's sellers there. If the price ever gets there, I'm looking for sellers to show up. So it went, and then it came back up here, and look at that. Sure enough, precisely 69.05, right where that candle is. When it came up there, it put in a reverse hammer on the 1 minute. I'm looking at this yesterday, and you're in this thing going down. And then again, right here, 69.05, just based on basically consolidation to a breakout. And you're identifying a particular candle. So again, the same thing happened, and this was yesterday. I took this position here short, going down with it. And the reversal here was it was putting lower highs with a flat bottom, basically a descending wedge. And then it broke, and it went. The next time it got there, ABCD going long. I believe I don't know if I looked at it. No, I don't think I was looking at it at this time. So here, as it gets to the point, if it gives you the reversal setup again, sure, you have it. If it doesn't, well, you're looking at the other side of it. If it's giving you that ascending wedge on a 1 minute chart. So you're really paying attention for those, 5, 10 minutes, 15 minutes? That's the time you're really paying attention. So if your alert goes off here at 69.05, 2 days ago it would have come off once. And yesterday the alert would have sounded twice. Right here, and then right here. And then you're not involved in all of this nonsense, It's pretty cool. Makes life easy. So we were talking about all this stuff and how to identify these things. And then let's see, I would put an alert here. I think I already did this earlier. Once this top is identified, this is basically yesterday's high. If it gets up there, if it prints a new high, looks like a 1 minute chart breakout, you have something. And I think it did that, yeah. Here's where I got involved earlier, went in and I got a break even, stop out. And then did not get in on the retest. For now, it's going the other way. So lots of fun. Lots of fun. Lots of potential in this environment. For now, 1 minute chart. Still bearish. Don't even think about this as bullish in any way. Good. Q's the same picture. This is the Russell. Oh, that's interesting. All right, so Russell, look at this one. We have where it went up. Here's your consolidation. You can see a breakout. Let's see if it bounced off. We're looking here on this 30-minute chart at, let's call it 2730. Go to the 1 minute. 2730. All right, so that's the area you'd be looking for long. But again, are you getting that long picture here on this 1 minute activity? I don't think so. I think you're getting chopped more than anything else. So even though the 30-minute setup, if a smaller picture is not set up, you cannot get a precise entry, then it may not be worth risking your money. That's something I like to do. Well, and what happened with oil? We were talking about, right? What were we saying? Looking at the long down here, 59.55, I think. Yeah. So again, here, even here, the same idea. We're looking at this area as an area of support, 59.55. But you're not getting the setup on the 1 minute. I don't see any setup. You guys see anything? Anywhere you would go long on this? I don't. So wait for it. And gold, yeah. Respecting that level, it was doing the ascending wedge on the 1 minute. That failed. Oh, that's a good point. Look at that. Wow. So here you go, guys. This is interesting, right? It pushed up to the level. And at this level, you may be interested in well, seeing what happens, right? So go to the 1 minute. That level's right about here. You can see that looks like an ascending wedge, getting ready for a breakout. But we were just saying earlier, you may not want to enter before the breakout. Let it break out, and then let it retest, then enter. Sure enough, the breakout never happened. So if you did enter during this ascending wedge, it would have taken a stop out. And this is the reason I like to wait for the breakouts and wait for the retest. Then the win rate just goes up so much, rather than entering during chop. And sure enough, it didn't work. This one didn't work. So keep it easy. Take it easy on yourselves. A little bit of patience. 10 minutes of patience will save you a few $1,000s, right? In my case, many thousands, 6 figures. You've seen me do this many times. Whatever your account size is or whatever your trading size is, I mean, it'll save you a lot of money. Just think of it that way. So don't just enter, wait for it. On the other hand, are you looking at a short over here? On this 30-minute picture? No, not me. It's very choppy right below this level. You see where it's been choppy in the pre-market? I don't think I want to do this. I wouldn't. And anyways, on the 1 minute chart, I don't see a short here. It went down, but I don't see an indication to put risk on. Not here. Silver here, 30-minute chart, nothing. We just went through this. All right. So we're in that time of the market where the opening volatility seems to have slowed down. And those of you who want to explore the day trader's graveyard, this is your opportunity to go blow yourself up right about now. And usually I wait for, well, you guys saw me do this last year where come back after about 11:30 or noon Eastern, and then I pick up on these beginning of trends. I haven't done that lately. Maybe I will. But I think that's usually when things tend to start, at least in my experience. But there you go. That's the opening volatility stuff. Keep an eye on this one. This will be fun. All right. Chop zone.
Yeah, everything looks ugly to me. Maybe someone else, if you're rocking and rolling, that's awesome. But I'm looking at 6 tickers in the market. I just don't like anything. In fact, I think I'm going to just take a break and come back in about an hour and see what happens.
Yep, that's a good point. It is messy now, and this is honestly it's pretty typical behavior. When you have tremendous amount of volatility at the open, it'll last maybe 30 minutes, maybe 40 minutes. We're kind of there now. What is it? Yeah, just about 40 minutes, 45 minutes into the day, and then let it relax. Then come back later. And a nice time to come back is really when your alerts go off. Whatever you have for alerts, whether it's a time or it's a level, let it buzz and then come back. But get on with your life. You don't have to sit and wait and do all this. A little bit of discipline takes you a long way, very, very long way. With the counts, you're done too. Good, good stuff. So there you go, guys. That's why I don't like trading the open. There is volatility, but just scalping, and if you're really good at it, you make 2R. All right, sure. So you risk $1 to make 2. You average out about that much. At least I did over the years, and that's if you're good at it. But then to really average 5R on your trading overall, I find there's other ways to do it. Bigger picture setups, putting it on, leaving it for a major target, and only putting it on when it gets to a key level that you're interested in, that you think there may be something. So if it gets to that level, then you look at it. If it gives you something, then put it on and leave it. And of course, you still take a lot of stop outs, but the winners are enormous. And you're not stressed out about jumping in and out of various things at the open, right? All that's fun, exciting, dopamine rush. But there's a big difference between dopamine rush and your accounts, your P&L. Right? They're inversely correlated most of the time in the trading world. Anyways, who else got something else to share? Some insights, some trades you took, some charts you're looking at? Anything you want to discuss? I'm still here for a little while. This is just ugly to look at. Set of cues, same story.
I tend to agree with Evo. Nothing is looking really good today.
Yeah.
Yeah, and even before we start, we saw London session. It was sideways across a lot of things: Nasdaq, ES, and gold. Crude oil is moving, but I don't know why. Crude inventories is today at 12, so it tends to move gold with it. Crude oil, I mean.
Yeah, crude oil. Yep. Let's see if it's yeah, it's there, but it's a messy environment. It was all right earlier. I think things set up and at least looking like if the breakout genuinely happened on the ES, on the SPY, could have gone, but not the other way. But yeah, it's a mess now, guys. It's a mess, and that's the thing about trading. You gotta realize you gotta identify when it's when the market's not worth trading, and when it's a mess, and then have your indicators to tell you when it is worth trading. When it looks like something is setting up, and it may want to go. And you'll find most of the time the market is a disaster, not worth touching. My real simple 80-20 indicator is room to the left. When there's room to the left, it has a chance to move. When there is no room to the left, well, it's choppy. So really, a quick glance at the charts tells me that already most of the time. But find your way of identifying when you should not be trading. Again, day trading doesn't mean you have to trade every day. That's the biggest myth on the planet. Don't trade every day. It's not worth it. Trade only when there's a setup. And again, with the futures market, with the 23-hour market, it's only trade when there's a setup. There's no rush. There's no rush to close your day green today. It's all that is that's a poor man's mindset. So yeah, get these things clear and you'll be all right. I haven't taken a serious trade in a while, I think. Well, not this month. Probably it's been a couple of months, I think. But no big deal. The market's still here. I'm still here. Can find a way to get into it nice and easy, and refine my method, and then I'll get into it. Yeah, this is a mess. There you go. Brian's looking at momentum slowing. You go into the 15-minute chart. There you go. And identify your stops and stuff. There you go. That's one way as well. I like that one. I haven't heard that in a while. But yeah, you're looking at these 1-minute pictures at the open, and then the market slows down. You look into something bigger, 5-minute, 15-minute. Keeps you away from the choppy noise. That works. I haven't used it. I never used that method before, but it makes sense. I'm just always on the 30-minute chart, so a little different. So guys, we were gonna have a webinar today, but that's been postponed for 1 week. It'll be next Thursday. We got Serkan in our group is gonna give us something totally different. You're gonna love this. So I'm excited about it. And tomorrow for me, well, for you guys in the United States, it'll be about 12 hours from now. We'll do our candlelight session again. So that's the next one we've got from now. 9:30 p.m. Eastern. I got it right. 6:30 a.m. in Dubai. So whatever that is for you. Always fun. Always a good one there. And yeah, that's the schedule. And then tomorrow's Friday, of course. I typically won't be here on Friday for the open, but I think tomorrow possibly I can. Probably half hour after the open or 45 minutes after the open, I think I can be here. And then, of course, we get into the Friday happy hour thing afterwards. So we'll do all that fun stuff. And by the way, some excellent trading. I'm seeing what you guys are doing in here with all the screenshots and your trades and comments. Good stuff, guys. I'm really seeing some good trades. Of course, the market's been moving a little bit, but to be able to identify the move, put on the size, put on the risk, hold for targets, all that stuff. Very good executions in here. I'm really happy to see this stuff. So keep it up. Good work in here. And we even have Ryan, who had his first 6-figure day. Fantastic. There you go. More and more aviators are getting into the six-figure trading days. Good to see. Telling you guys, it's available. The market is so abundant. It's such a gold mine. It's available to all of us. Just keep your head on your shoulders. Keep your discipline. It's freaking amazing. It's amazing what's available. Hey, tell me, which other trading group has multiple 6-figure day traders in there? Huh? By 6 figures, I mean making 6 figures in a day. I don't know of any. This is really cool. Really good to see. And we have a lot of guys in here who are trading into the 5 figures every day. So, it's really good quality trading. The size does make a difference, psychological difference, but you're able to handle it. You're able to grow into it. A lot of guys in here are growing into it. So that's really great. Love to see this. Progress is a good thing. It's fantastic. Again, you're doing the work, you get the credit. Amazing. So keep up the good work. Fun stuff. I remember the momentum when I first had my first 6-figure trade. The next day I came back and made it a multiple 6-figure trade. It was more, it wasn't so much putting on more risk, but it was, the market moved. I got into a good position, but the appetite grew tremendously. You get that momentum and you realize what's possible. It just kind of hits you. It's more of a subconscious mind thing. And then you're almost in those, like on autopilot, you're in the flow. You're in the zone, you're in flow. And that was all of the first half of 2025. It was just basically 6 figures and multiple 6-figure days almost every day. It's, you really get into a zone once you go out of your comfort zone and you build this momentum. You start tasting these results. Man, you become unstoppable. Really, you do. And that's a human nature thing. So really good stuff. I mean, really push your boundaries, push your comfort zones, and then you'll see your whole world will expand. It's tremendous. Absolutely tremendous. And I'm pushing my comfort zone now by looking at the futures market. it's not too difficult for me to go into the options market and just do what I used to do and trade like that. But I'm taking the time out now to figure out the futures market because I think the potential is even bigger over here. Once I figure out my way of doing it, make sure I got the right tempo. I think this is massive. There's a lot of money to be made. So yeah, all good stuff. Keep up the good work.
The gold is going. I'm along gold again. I don't know.
All right, gold, yeah. So I see it here at this measured move level. 30-minute chart looks like it's consolidating right below the level now. This time it looks like it's put in a higher low. And yeah, again, the breakout, I think that's a key area. This 48.50. That breakout, if it happens, great. I think that'll be a tremendous breakout. It's gonna rip. Hey man, Tarek, we gotta create a bit of a trading floor, somewhere here in Dubai. I mean, you're hardly like 10 minutes away from me. We could rent an office, put a few computers in there, and we'll have a pretty good group.
That would be amazing.
There's a few guys I know in Dubai who are doing that, and they told me about it. And I'm like, huh, okay, maybe.
And that's going. I trade off my laptop also, so and I have like external screen and stuff like that. So
Yeah,
I'm hooked to trade out of my desk.
yeah, that's great. I have the same. So we can do that. We can definitely do it. There's a lot of people doing that stuff around in Dubai, at least I know of. And mostly they're doing trading workshops and seminars and like a 2-month trading education program or something or the other. But just to get together and then do this in person in the room, we already have quite a number of people around Dubai and Abu Dhabi in our group here. So yeah, Adiraj, you're in here too. So well, why are we talking to each other online when we all live 10 minutes from each other? I don't get this. So might as well. It's a different kind of energy to do it in person. Of course, when you do it regularly, it matters. It's not when you travel and you meet up some exotic corner of the world, you do it for a day, maybe a couple of days. That's more just vacation than anything else. But if you can do this in-person thing on a daily basis sort of environment, it really changes the vibe, changes the mindset, and I think it's very powerful. So
yeah, I'm bouncing trade ideas like I was talking earlier with Brian. Like he was sharing some of his trade ideas, not even for day trading, but for a longer term, which is amazing. People with the same mindset.
It is. It's amazing what comes out once you create the right environment. Truly amazing. Let's see what we can pull off here in Dubai. There's a lot of opportunity. Yeah, we can just bring our laptops out and begin that way. That's easy enough.
But let's not trade in the bar, I tried to trade in the bar before.
What are you doing? Trading in a bar. What, you take a stop loss, you order another tequila. Shit. Don't do that.
Avi, who needs office space when you have a cell phone and a hot tub?
There you go. No, that's my style. Well, we get an office with a hot tub in it. I'll be in there with my cell phone taking trades. You guys can have the tables around. We're good. Oh man, the hot tub trades, those are the best. I'm getting closer and closer to doing those again because in the futures market, you don't have to worry about time decay like the options world. So I might do that again. But I'll tell you, that's the best thing when you can truly detach from trading, as in put on the size or put on the trade and put on the automated trade management where moves your stop to break even, takes your targets, partials, whatever. You don't have to think about it, and go and do something fun. Go ride a bike in a mountain or go sit in a hot tub, whatever you like to do. And you're having fun, and the trade just goes and it does exactly what you would have done if you were watching it anyway. It probably does it better because you're not being subjective. Look at that gold, the little pop just now. broke out of that very minor resistance. Let's zoom in. Here's that minor resistance, little pop, but as we know, 4850 is a key area. I'd like to see a tiny consolidation here and then rip, but let's see what happens. So again, previously we saw it was setting up for the breakout and it didn't. So don't enter before the breakout is what I like to do. Wait for the breakout to be genuine. And then you have an opportunity. Price of gold, huh? There you go. Did it print a new high? There it is, printed a new high. So that's a breakout. Again, I'd still wait for the retest. What you can do is maybe enter and then put a stop in and add more at the retest. So that would be scaling in is another way to do it. Personally, these days, I think I just wait for retest, and that too on a 30 minutes, so it's much slower. But there you go, guys. You can see the volatility again. When you zoom into these 1 minute candles, you can really see now the picture has changed, right? It was slow, looked like a screenshot a little while ago. Now you can see this thing moving. So you know it's suddenly in place, suddenly there's volume, suddenly there's interest. There's a reason for it to move. Whatever the reason is, I don't care. All I know is it's got momentum. So this is how I read momentum. Just watching the candlestick move. You can see there it is, your momentum's in it, or it was in it. Let's see now this retest come in. And yeah, so now you can start looking at it. And a lot of guys ask, how do you identify momentum? This is how I do it, just watching the candlestick move. But again, this is not something I do much anymore because I don't trade momentum too much these days. I like to enter with momentum and then leave it for the trend. Ideally, if it works out, that's great. So there you go, Tarek. Did you get it? Get into the gold. You brought us to this one.
Yeah, I took my first partial when it hit 48.52, and
Nice.
I'm still holding another contract for 48.65.
All right, there you go.
Yeah, let's see if it will make it.
Yep. This is a healthy pullback after great big pop to the upside. Healthy to come back and retest, and then again, if it does a good retest, you have the opportunity to put on more size. And those are the ones that I like to do. Fun, good stuff. Gold, gold, gold. Here we go. Yep, right through that level. And if I was in it or looking at getting into it, I would again stick partials at halfway because that's a long distance to go. Halfway, and we know what there's sellers up here halfway, and then the other target would be further up. And it may take hours to get there. No big deal. So I'm trying to target those kinds of moves. Would have been great if I was watching it earlier. It's amazing. The market's been making so many moves that I've not been watching lately. I mean, they move, and then I end up looking at it hours later. I'm like, oh, if I was watching it at the time, the candlestick setup was there. So I got to get more serious about putting alerts on my phone and let it buzz at me when it's time to trade. So look at that. Tiny consolidation, not even really a pullback so far. A little consolidation on gold. There you go. Good stuff, guys. So again, one thing I think I've told you guys many times is the quality of the consolidation generally tells you whether the breakout's going to be genuine or not. And the quality of this, you can see here, is higher lows with a well-defined breakout area. And so you can trust the breakout more just based on the quality of these consolidations. That's something I always look for. If you look at this one, it's not really higher lows. It's kind of just sideways consolidation, and it breaks out, kind of goes a bit, not really. We're down here. This is a large consolidation. It's big candles, and then it goes and it struggles and it goes again. But I like to see it a bit like this. You see these higher lows coming in on this area with the top pretty well defined right about in here. Here comes your breakout. Here's a retest, and ooh, this thing really ripped. So that's something I like to see. Again, it just increases the win rate when you're trading breakouts. Look for the quality of consolidation. Again, if it's a breakout to the upside, you want higher lows, an ascending wedge. If it's to the downside, you want lower highs, the descending wedge. Just little clues to help increase the win rates.
You also like to see during that consolidation phase, Avi, a southern wicks to indicate some buying pressure on the rising lows.
Yeah, absolutely. And you get them right here. See these
Yeah.
these buyers stepping up, and then it's got tightening. This is actually a fractal pattern on a 1 minute. It's very good. There you go. Yeah, definitely. The wicks tell you a lot. I like to pay attention to the wicks. They tell you so much. You know, where the buyers are, where the sellers are, if they're fighting it out or if one's taking over. And over here, you can see that they're taking over. But zooming back a little bit, you can see we had this ascending wedge here. The buyers were taking over, but never did the breakout. You can see it just lost. So you never would have entered, even though it was setting up. And then it's set up again with these higher lows, these wicks coming in, and got really tight, and then the breakout got underway. And now you're gone. This one didn't want to do a retest. If it comes back now to bounce off, I would hardly call that a retest. I'd say, okay, it's done. But it's on its way firmly. And there you go. Target zones up there. I see stuff like this and I get tempted to go live again. It's so tempting. All I have to do is click a button and go live. But not yet. Not yet. I'm not there yet. It's worth waiting for. I mean, the things I'm looking to trade or the results I'm looking to get when I go live are basically bigger than what I did before. And I realize with the methods I'm using and the tempo that I'm working at with this futures market, it's not really happening. No point going live now. Rather wait till I got everything well aligned and then go. So all these sim trades I'm taking, usually they're not at the open, they're overnight or later in the New York session. And taking a lot of stop outs, a lot of break-even stop outs. So I'm still trying to figure that out. Maybe my targets are too far out. I don't know. So I'm working those things out, little kinks. But once that's cleared up, then we're underway. The thing is, I'm getting into actually a lot of good positions. A lot of times I get into, I put on the risk and it goes in my favor quite quickly and I'm able to de-risk quite quickly. But I'm not able to get paid on those just yet. Just taking break-even stops. So trade management stuff, perhaps. Things to look at, right? All right, what do we got here? Oh, there we go, past 10:30 already. We got Brian trailing stop hits while you're ironing your shirt. Cool. Trailing stops are one way to go. Fun. All right, anyone got anything else to talk about before we end this one? Everyone good? Sorted out? So don't forget, we have the candlelight session in about, 12 hours from now. So try and make it to that. Again, we get more in depth with various things, and these are turning out to be a lot of really valuable for everyone. I enjoy them as well, of course. So try and show up to that. Other than that, thanks a lot, guys. It's been fun again. Don't blow up. You know what to do. Take it easy. And I'll talk to you soon, guys. Thank you.
Thanks, Avi.
Thanks, Avi.
Sure.
Thanks, Avi.
Sure. Take care, guys.